Okay, good afternoon. I hope everyone can hear me. Just a quick sound check. If you guys could type yes into the chat window, if you guys can hear me loud and clear. Perfect. Okay, thank you so much. Okay, great. Good afternoon, everyone. I hope everyone's having a great day and a good summer. My name is Tony Zhang. I'm the Chief Strategist here at OptionsPlay. And today we're going to be doing a quick Nordic market outlook session where we just look at the broader markets, take a look at seeing where the four Nordic markets are trading, what trends we currently see, and a couple of ideas that we're currently looking at the moment. So let's go ahead and get started here. Before I do, just a quick disclaimer. What we're going to discuss here today is purely for demonstration purposes. It is not a solicitation or recommendation to buy or sell any specific securities. Now, the question that I want to help investors answer on today's session here is, can the Nordic markets continue to push higher? There's been a lot of questions from investors over the past few days, past few weeks, even the past few months regarding the disconnect that we're currently seeing between the markets and what we feel are economic numbers and fundamentals of companies. We clearly see a very large decline in terms of corporate profits and revenues, economics in terms of unemployment, record unemployment for many countries around the world, and equity markets don't really reflect a lot of this. So the question for many investors is, can markets continue to push higher? Where are markets headed next? And what we want to do is review from a macro perspective where they currently are and what our views are for them. My name is Tony Zhang. I'm the Chief Strategist here at OptionsPlay, and so let's go ahead and get started. We'll start off here with the Stockholm OMX S30. So looking at the Swedish markets, we've been looking at this index for quite some time, but what's interesting over the past couple of days is really the recent breakout above the 1740 level. The breakout above that double top, managed to break out above it. Looks like it's going to pull back a little towards that support level and potentially move higher here. So this is really the bullish setup that we're currently seeing here from the Swedish markets. I do want to point out some concern here. On the weekly chart, as prices continue to make higher highs, what you have is momentum not confirming that high. So you have a bit of negative divergence here on the weekly chart. And you also have that same negative divergence here on the daily chart, where prices continue to make higher highs, but momentum does not confirm these moves and is not making a higher high. This means that there is a higher probability and a potential for a pullback here before this market can continue to move higher, because markets cannot just continue to move higher. They need to consolidate, as you saw during like a time like this. They need to consolidate. They need to move sideways before they can continue moving higher. So that is one concern that we have, but we certainly are still in a more bullish state during this time. We want to be a little bit careful about chasing these rallies. What we want to do is be more defensive. And I want to show you some names that may be a little bit more defensive or have already pulled back that you can use for a potential long here in these markets. So that's the Stockholm market, which is the largest by market cap in the Nordic markets. If we look at Copenhagen, which is a smaller market, but heavy in biotech, not as many financials. As you can see, markets look very, very different because the Danish markets have managed to make it to new all-time highs beyond the February highs. So we've recently had this breakout about 2 weeks ago above that February 2020 high, still continuing to go further beyond that 1400 level. Now, one of the things is that we also see similar types of negative divergence as markets continue to move higher, make higher highs on the weekly chart. Momentum is not confirming those moves. So what that means is that you have a higher potential of the pullback here, and you need that kind of pullback before it can continue moving higher. And especially if you think about this index was at 960 about 3 months ago. It's now trading at almost 1440, 1450. So you're talking about a very, very large move without any real pullbacks. The largest pullback was right here. It's fairly minor. So when you have markets that move this far, this fast, generally speaking, you need to have pullbacks, you need to have consolidations before they can continue moving higher for a healthy market. It's not healthy for a market to just go straight up. So those are some of the concerns that we see, but clearly above these levels, these are still we are bullish on these particular markets, but be careful when you're chasing these longs. Make sure that you are looking for opportunities where stocks have pulled back a little before you look for long opportunities in these types of names. When we switch over to Helsinki and Oslo, both of these markets are significantly smaller. They're more like the small cap names of the Nordic markets. And largely, they are in line with what we're seeing in terms of smaller cap markets around the world, in the US, globally. Basically, these are more neutral markets. So as you can see, Helsinki has not made it beyond that recent high. So where Stockholm has managed to break out above that a few days ago. The Helsinki market has not yet, or the Finnish markets have not managed to break out above that. It does seem to be gathering some strength here, making higher lows here. As it continues to make higher lows, we're looking for that potential upside breakout above that 150 level, 4150 level here on the Helsinki markets. So more neutral, but looks like it's starting to gather strength. If you look at the momentum indicators, there's still plenty of room to go to the upside. So you still have quite a bit of potential for this to break out and break out higher. The Oslo market, this is the Norwegian markets are the weakest of the markets. As you can see, the Norwegian market's still trading below some major support levels that go back to 2019. So these support levels that were broken during the COVID-19, it tried to break out above it, but it failed at those levels. And it looks like it's trying again to break out. But there's a ton of resistance here. You have this 780 support level here that is going to be a tough one for it to get above. You have the 200-day moving average, which is another one for it to contend with. So you have a lot of potential resistance here in the 780, 800 level. But if it can manage to get back above it, you do have a lot more room to the upside into that 875 level. So the Norwegian markets, the weakest of the four, I know this is not one that everyone trades a lot, but OMX O20 index is an index that you can trade here and you can, it's an index that you can look at using OptionsPlay. So it's definitely one that we want to pay attention to and show you where the opportunities are. But again, this is one of the this is the least strongest of the four markets here that we're watching. So with that, what I wanted to do is I want to take a look at COVID-19 trends. So this is something that for those of you that live in the Nordics, you're probably familiar with, but I do want to point you to one chart, which I think is a great way to visualize COVID-19. So especially as you're investing in the Nordics, or perhaps if you're investing elsewhere in Europe, and perhaps even in the US, how do you want to look at how COVID is doing in that particular country? What we typically look at is really the number of new cases on the x-axis versus the total number of confirmed cases using a log normal scale. And basically, whenever the number of new cases starts to drop in relation to the total confirmed cases, what you normally have is when a country's COVID-19 trend is continuing to grow, it just goes along a line like this. And once it stops growing and once the country is able to bend the curve, what you get is this very dramatic downside fall, if you will, on the particular chart. So Sweden, obviously the worst of the four, recently started to fall. This is telling us that Sweden has managed to flatten the curve alongside Finland, Norway, and Denmark, which have been there for quite some time. The one thing I will point out is that we're starting to see some small spikes in Denmark and Finland. As you can see, they're off the lows. The lows are here for Denmark. The lows are here in Finland. As you can see, it's had a small increase recently off those lows, but nothing to be really concerned of at the moment. Sweden near the bottom, meaning that it is continuing to improve. And you can compare that to countries like here in the US that are still continuing to grow at a fairly substantial pace. And as you can see, the the slope of this line really tells you how bad it is in that particular country. So it's a great way to visualize how COVID-19 is doing in a particular country, especially if you're investing internationally. So with that, what we wanted to do is take a look at a few different ideas that we're currently looking at for the Nordic markets. The first one I wanted to point you to is Skanska. Now, we knew infrastructure spending is definitely going to be one of the sectors that is going to be relatively strong, just because this is one of the ways that governments around the world are going to be stimulating their economy is through infrastructure spending, because it provides jobs for those local markets. It is something that, especially during and after a recession, these are the types of spends that many governments will typically take on. And we're seeing that in terms of Skanska signing on a lot of new projects during COVID-19 and is likely going to continue that post-COVID-19. So this is one of the charts that we're paying attention to from a fundamental perspective. But if you look at the chart, you've had Skanska contend with this 200-day moving average for quite some time. The 200-day moving average happens to also coincide with the 200 psychological level. So, we always think of 200 as the big round numbers as a psychological level. It's been rejected multiple times at this level, but as it gets rejected, it continues to make higher highs. So every time it makes a higher high, now it's back at that apex of the triangle. It's possible that it fails at this next support again before it continues to move higher. But as we continue to see higher highs, our view is that Skanska is going to break out to the upside. So what we want to do is we want to take on these types of exposure to look for bullish opportunities. As we saw, the broader market, clearly both the Swedish and the Danish markets are very strong. They are clearly in bullish trends. They have some negative divergence, so we want to wait for some pullback. So this is a particular name where perhaps you get a failure here at the 200, and then you get that move to the upside. So what we want to do is we want to make sure that regardless of how we gain our long exposure in these names, we do so in a way with limited risk. And one of the ways to do that is by using options. So what I'll do is I want to show you how I could possibly structure this using options. So again, you have this major resistance level here in this 200, 209 level. And what we want to do is we want to show you how you can utilize options. And I'm going out to September because I do think that this is the type of trade that you need a little bit more time than just 30 days or so. And I'm going to use something like a call vertical here, where I'm risking, where I'm buying the 195 calls for Skanska, which is where it's trading right now. And I'm selling the 220 calls against it. So I'm paying 10 crowns for the 9.5 crowns for the 195 calls, and I'm collecting 1.3 crowns for the 220 calls expiring in September. So my total cost in this trade is 820 crowns. Now, if you think of 820 crowns for 195 crown stock, what I'm actually risking here is about 4.2% of the underlying stock price. So no matter what happens when I buy a vertical like this, even if the stock plummets all the way down to, let's say, the 130s or 140s where it was trading back here in March, let's just say things really turn around, things get really bad, I'm only risking 4% of the underlying stock's value if Skanska continues to decline, which from a fundamental perspective, from the technical perspective, that's not the base case that I'm looking for. I'm looking for a breakout here, but we always want to plan for the worst. That's what options traders do. Options traders, what we do is we want to utilize options to protect ourselves. We want to think about what is the worst case scenario first. How much do I have to lose? Am I okay with that? If you are, then you can then say, okay, well, what happens if this market continues to move higher? How much profit do I potentially make? And one of the things is that, as you can see, I can buy an August 195 call, which expires in 30 days. That only gives me 36 days of exposure for 820 crowns. Or I can buy this call vertical that gives me exposure all the way out to September, which is 64 days away. So I'm basically buying myself double the amount of time for the same amount of risk. The only thing I'm giving up is any gains above 220. So even if the stock goes above 220, or I'm sorry, if the stock goes above 220, that's where I'm no longer participating. But that's part of why I'm selecting this 220 strike here, because 220 puts me back into the January, February highs here. And given the outlook of the global markets, I think that there's a cap as far as how far this market can go. And that's part of why we're using strategies like a vertical spread here to decrease the cost of my trade. It buys me a little bit more time, and I'm okay if I give up gains above 220. So this is how I'm looking at the Skanska at the moment as far as trading this particular trade using options. The next trade I wanted to take a look at is Sandvik. Now, this stock reported earnings today. It came in worse than expected, so the stock is down about 7% today. But I think one of the things, if we first zoom out here, you have a weekly chart. And for those of you that use technical analysis or use charting, for those of you that have a very keen eye to technical analysis, you might see this as a bit of a head and shoulders formation, and you see this as a potential for the markets to continue moving lower. But head and shoulder formations typically are a topping formation, which means that you need to have an asset that comes from lower, then forms a head and shoulders, and then what you get is a decline afterwards. But that's not what we're seeing here. It enters this from the side. So I don't really see this as a head and shoulders, just so you know, even though to the eye that might look like that. What I'm more focused here is on the daily chart. As you can see, the daily chart here is on a fairly strong bullish trend. The recent weekly chart is also on a fairly strong bullish trend. And what you have is this daily chart that has multiple pullbacks here. And every time it pulls back towards that, below that 20-day moving average, that is the opportunity to buy. And despite the fact that this move was caused by an earnings event, doesn't make that any less of a potential buying opportunity. So every time it goes below that 20-day moving average, this is potential for a buying opportunity. So, and again, because of the fact that this was knocked down about 7% due to earnings, there is a few ways that you can play this. And I want to show you how I would think about this. So as you can see here, this stock recently declined. It's still above that support level here around 166 or so. So yes, you can buy a call option, which allows you to potentially take this stock moving higher. But because this was a decline based on earnings, I think the markets are going to digest this information for a little bit. So my preference here, instead of buying a call option, is to actually sell a put option. Using a put vertical, something like maybe a 170, 160 put vertical here. As you can see, this will collect 340 crowns for the 170, 160 put vertical. What I'm doing here is I'm selling the 170 puts, collecting 6.5 crowns. And because selling a 170 puts has unlimited risk all the way down to 0, because if I sell these 170 puts and the stock declines even further, the further down it goes, the more money I will lose. And that's not a position that I always want to be in, especially after a stock has had disappointing earnings. So for this, what I want to do is I want to protect myself. I'm going to sell that 170 put, but I'm also going to buy a 160 put against that. And what that does is it protects me to the downside. So even if the stock goes below 160, I cannot lose any more money, because whatever money that I lose on the 170 puts, I will gain back on the 160 puts. So this put spread is really how I think I would look at playing this type of name, so that even if the stock just trades sideways, this strategy will still be profitable, versus if I bought a call or a call spread, if the stock stays exactly where it is, I'm going to lose money if I bought a call or a call spread. But if I sold a put spread, I collect the 340 crowns on this particular stock. As long as the stock stays above 170, I collect 340. My break even here is 166.60, which is all the way down around one right here or so, 166, which is just at that support level. Basically, what I'm what I'm doing with this particular trade is I'm suggesting that I think that this stock will stay above that support level. As long as it holds that support level, I'm going to collect my 340 crowns. If it does go below that level, that's where I'm risking up to 660 crowns if the stock goes below 160 at expiration. So I have about 34 days to go here on 36 days to go here on this particular name. So those are the two different ways that you can utilize options to take a bullish view. You don't necessarily have to believe the stock is going to make a big move to the upside in order to have a bullish view. You can have a more neutral view that skews to the upside. You basically think that it's going to stay put, maybe move a little higher, but not a whole lot higher. You can still make money utilizing options and do so in a way with limited risk using a strategy like a put vertical. And lastly, what I want to show you an idea is Kinnevik. This is the asset manager here in Sweden. What I find interesting about this particular name is that even though it is considered financial, it falls under the financial umbrella, and it falls under what we would traditionally call an asset manager. But if you look at their business model, they are much more like a venture capital firm. They invest in fairly early stage non-public companies. And what they do is they will, and they particularly invest in companies that have digital solutions to disrupt specific industries. They seem to be across the board in terms of many different industries, but their key is that they only invest in companies that have a digital solution to some kind of industry that currently is being disrupted. Now, what's interesting about this particular name is that it had some really strong momentum this week and managed to break out above this major 275 level that's been holding this company, that's been a resistance of this company since 2019. Multiple times in 2019, this stock tried to rally above 275, could not do it, but recently over the past few days managed to do it. Now, if we look at the factors that are currently working in this market, momentum is by far number one, and this stock has a lot of momentum. But some of the same concerns that we saw in the OMX S30, basically what you saw is higher highs, but momentum did not really confirm those highs. So what you want to see here is a bit of a pullback before you look for an opportunity. You don't necessarily want to chase these at all-time highs. So what I want to do is I want to show you this particular chart. I want to show you how I think I would play this in this particular name. So 275 is that breakout level. So what I was looking at this name earlier today, and I was thinking that to invest in this type of company, I think I would go a little long term, and I would buy something like maybe a 280 call, something along these lines. And the reason I want to buy something like a 280 call, perhaps even a 275 call, is because that lowers my break-even price just to similar where the current price is. This puts a little bit more risk on the table, but what this does is it gives me all the way out to October. The 275 puts happens to be that breakout level that we had, right? That breakout level I referred to. Now these cost 30 crowns, almost 30 crowns per share per contract, but this is a 300 crown stock. So I'm risking about 10% of the underlying stock price. But the reason that I'm doing this is because, as you can see, by buying a 275 call, my break-even price is 304.90. That's only about 7 crowns, 8 crowns higher than where the stock is trading right now. And this stock can move that much in a day easily. So this stock is a strong momentum stock. It doesn't need to move that much before this strategy breaks even. And if you do get that move to the breakout or move to the upside, this is the type of strategy that I would be looking to deploy. Now, again, I personally would prefer to see a little bit of a pullback here before I look for a long position. So I would be a little bit more patient on this. I know that these high momentum stocks, many times it's hard to be patient because these high momentum stocks, sometimes they don't really pull back. But generally speaking, as you can see here, this, the recent move here to the upside is significantly steeper than any other move I've seen in the past. And at least, any other move in the past that was this steep had some bit of consolidation before it continued to move higher. And that's exactly what I'm looking for. When the stock makes this big of a move and this quick, generally speaking, you'll see a little bit of a pullback or at least a consolidation before it can continue moving higher. And so the way that I'm looking to play this again is just a simple call option, because these high momentum stocks, especially at new all-time highs, it's really difficult to tell to see how far can these stocks go. And these high momentum stocks, especially something that invests in relatively small cap, early stage companies, you could see quite a bit of upside here. And I think a call option is the way to play this. There is a fair amount of risk, but what we've done is we've defined that risk to just 10%. No matter what happens, you're only risking 10% of the underlying stock's value to trade this. So with that, that's what I wanted to cover with you here today. The goal was to really give you a brief overview of the broader markets, where we currently see the 4 major Nordic markets, whether we're bullish or bearish on them. Most of them, the major ones, the Swedish and Danish ones, we are much more bullish on. There is some of that negative divergence, so wait for pullbacks here in the market. Or if you're trading individual stocks, look for names like Sandvik where they have already pulled back to go into those long positions, and then seek some other opportunities like we showed you in Skanska in this that allow you to utilize options to define the risk. 4, 6, 10%, those are the maximum ranges that you should be seeking in terms of your max risk of the underlying stock price. This allows you to continue to take bullish views into this market that has some risks for potential pullbacks, but do so in a way so that you protect your portfolio in case there is a major downturn or markets continue moving lower. So with that, thank you so much. I hope that you guys find this useful in helping you set up your trading day, providing you some ideas, providing you some insights into how we currently view the Nordic markets. And at this point, I do have a couple of minutes. If anyone has any questions, you can type them into the chat window, and I'll try to answer a few questions here in the next 2 minutes. Thank you so much. Again, if you have a question, just type them into the chat window. Someone wants to look at AstraZeneca. Let's look at AstraZeneca. The pharmaceuticals have been particularly strong, and AstraZeneca, what I like about AstraZeneca is that it broke out above that resistance level, came back to test this as support, and is now starting to move higher. That's exactly what we're seeing here on the weekly chart. You're seeing this on the daily chart as well. I've talked about this stock quite a bit over the past few months here. So you've got this breakout, pulled back to this, consolidated for quite some time, and is now starting to break out. So I think that this is fairly constructive for this stock to at least resume back to 1075. And then I would look for a potential breakout here above 1075. Yeah, so a lot of these pharmaceutical names right now are trading on optimism of the COVID-19 phases, COVID-19 vaccine trials. If I'm not mistaken, AstraZeneca is partnering with another firm for their COVID-19. I don't believe AstraZeneca has their own, but certainly definitely one that I would pay attention to. BOL. So this looks very similar to, well, first of all, I want to point out the weekly chart doesn't look particularly strong, right? So every time you have this this kind of downtrend here on the weekly chart, that's not particularly strong. But if you look at the daily chart, you do have what I would consider a bottoming formation, right? So you have this bottoming formation here, and it's managed now to break out above that triangle. So this certainly looks like it's starting to turn around, but as you can see, the 200-week moving average is at 240. It's tried to break out above that 240, but then it's failed at that 240 level. I would wait for a breakout above 240, and what that tells me is that perhaps this long-term downtrend is starting to reverse, and you're starting to see a reversal higher. So I would watch this 240 level. If it gets back above that 240 level, then I think you have a lot more room to the upside, 260, 280. But until then, I'd be a little careful on this. So with that, thank you so much. I hope that you guys find this useful. We will send out the recording to everyone here with the slides so that you can follow up and watch the recording on your own time. So thank you so much. I hope you guys have a great trading day.